Hey everyone, welcome to the Trend Investor channel. So in today's video, we're going to look at a stock from a sector which is kind of doing pretty well, and a lot of people have been investing in this sector since quite some time. But this company which manufactures engines or generators, for some of the biggest industries in the world, and that's the company that we're going to focus today. This company has grown its sales by 20% CAGR in the last 3 years and 172% CAGR again in the last 3 years. So the company was not profitable a few years back, but right now it's profitable, and in the last few years it's increased its profits drastically because of the operating leverage that this company has been able to extract in the last couple of years. And that's why this company looks really interesting to me. And in this weak or bear market, this company has not fallen at all. It has kind of moved higher, and after a very strong consolidation, and I find the stock to be really mouth-watering, and I feel this stock can do well in the coming days. But before that, don't worry about the bear market and all this. This company, if you want to invest, try to invest a very small quantity. I'll talk about that soon. But that must be a question that you're asking yourself: should I be investing in this kind of market? Now, I always feel that there will always be opportunities in any kind of market, and that's why I'm making this video. Okay, so if you did like my past videos, and if you're new to my channel, like this video and subscribe to my channel, I'm sure you'll find a lot of learning videos to learn and grow and learn with me. Okay, so let's look at this week's stock video, and the stock that we're going to look at today is TD Power Systems. Okay, so TD Power Systems is in the space of generators. They do manufacture generators. I'll quickly walk you through the company's presentation, and then we can look at the fundamentals and the technicals of the company. So from a fundamental perspective, as I said, this company is into manufacturing of generators and electric motors for various applications. And this company has not been doing well for many years, but of late it's not like not doing well, but the sales was kind of stable and it was not growing much. But of late in the last few years, it has been growing very well. So just looking at the slide again. So I'm just going to show you what this company does, and then we can look at the technical aspects as well. So if you go to slide number 11 in the investor presentation, the results were released recently, and I'm looking at the Q4 of the financial year 2022, where this company had this presentation. So this company is it does a majority of the sales is coming from exports, and 50% of sales is coming from domestic sales. So if you look at this chart here, this company has presence across the world. It does have presence in Europe, it does have presence in Japan, Australia, South America, Africa, and even North America, right? So it is kind of present across the world. In fact, 98 countries is where they have done the sales. Okay, and if you look at some of the the components that they manufacture, so if you look at the slide, they have generator for turbines, they have generator for engines, they have generator for a lot of other industries like trains, like ships, oil and gas industry, and a lot of other industries, right? And it's a very diversified business, and they do have a very strong diversity in terms of the revenue. So a couple of other slides that I wanted to show you is this one. What are the macro factors that is driving the sales of this company, or what are the macro factors driving the profitability for this company? So one of the key points that this company says is that this capex cycle in India is picking up again. It's gaining momentum, and we all know that metal companies have been doing well, steel companies have been doing well, cement companies have been doing well, and also distilleries. Right now, we all know the story of sugar to ethanol, and a lot of companies are setting up ethanol distilleries, and they need engines. And that's also where this company is focusing on, and they have this waste to heat recovery industries as well, right? And there's a lot of new plants coming up in India. The growth is there, and that's why they see that this is probably why the demand is very strong. And they also have their old business that they had. So for the aging fleet, maintenance is also another business. It's a constant income which they have. And the most important point that I want you to look at is the huge investments plan in the railway sector. This company has some of its revenue coming from in fact, a majority of the revenue comes from the railway sector, which is kind of not good, but I take that on the positive side because they're also focusing on other sectors. They're kind of growing, and that's also a very good positive point. So in the export market, the gas engine and the turbo generator has seen a very strong demand. They are also seeing some business from Vietnam, the waste energy plants in Europe. oil and gas business in the USA. Now the crude is above 100 levels, and that's kind of a very positive point for most of the oil and gas plants, and they might also think of investments. So that revival of the business in the US is probably also driving the demand, right? And they are trying to create a strong brand across the world, and that's also trying to increase. That's also helping them increase revenues. Now, just looking a quick look into the financials of the company. Right now, let's take a look at the right side here first. Now, railways does contribute a majority of the sales, right? It's almost 9,000 or 98. 9892 is coming from railways, then you have domestic business, and then you have export. So export has a decent contribution. If you take this all together, so it's 11 to 13. So 2 out of 13 is what is coming from exports. So it's not a very big number, not a very significant number, but they're still growing in the exports as well. Now, the order inflow is what I wanted to also specifically talk about today, because if you look at the FY21 and 22 order flow, they have seen a very strong increase in the manufacturing order flow, and they've also seen a very strong increase, overall, there's been a 22% increase in the overall order book. Now that's a pretty strong, growth in terms of the order book, and I feel that the next year revenue is also going to be pretty good, and they might perform, very well, and the stock price might head higher, and that's why we're looking at this company today. So that's the, fundamentals of this company, and the fundamentals look, exciting. I'm also going to look at the financial numbers the company posted this year, but overall, just remember, one, railways, there's going to be a huge demand from the railways for all these fast trains, speed trains, also electric trains. They have the supply generators, engines, so that's one of the biggest components, and then exports also are doing well. Okay, so taking a quick look at screener.in and just showing you what the company is about, right? So the company has a market cap of 1,200 crores. It's a pretty small company, and they have currently it's trading at a PE of 19.8, ROC is 15.4, ROE is at 12. So a very decent company when it comes to capital goods, right? Because this is more heavy investment business. I think the ROC is pretty decent, PE is pretty decent, and promoters hold a decent share in the company, and they have pretty good cash in their books as well. So as I said, this company, if you want to go through the details, you can go to screener.in. You can find the details here, right? So they have a pretty strong revenue breakup coming across geographies. Like as I said, 50% is coming from domestic and 50% is coming from abroad. So even if you consider railways, don't it's not just railways which contributes to overall. So in terms of customer concentration, their top 10 customers contribute 86% of total revenue. So that's a flag, but I don't think in this capital goods business, I don't think there are many players, and companies tend to stick to the players that are supplying, and they also supply. They are the OEMs, original equipment manufacturers for turbines for Siemens, General Electric, even for Alstom, Triveni Turbine. There are a lot of different companies which are, taking orders from this company. So that's from what the perspective of what the company does. And looking at the PE ratio, which you always do, you see that increase in the EPS, right? Earnings is increasing, and that's why the stock is now gaining traction. And I think it's going to do well in the coming days and coming months. Looking at the overall sales, it has done almost similar kind of sales as in September, but considering year on year, I think that's a pretty decent jump. And overall, the margins have been increasing in the last 3 quarters. There's a continuous increase in margins from 11% to 13% in the last 3 quarters, and overall, even the profits have hit an all-time high, quarterly profits. Looking at the trend of the yearly trend, they have been pretty flat. Since the last 10 years, they've been pretty flat, 9 years. But this year, they have seen tremendous jump in the sales, right? Almost 797 crores from 600 crores, right? And the profit margin has increased from 2% to 7%, 12%. Now remember, this is a company which is growing. They've been pretty small. Now they're growing, and the operational leverage is now kicking in, and which means as when they manufacture more, the operational efficiencies will kick in, and the margins might increase, and it might even head to 14-15%. Which means on a sales of 1,000 crores, they'd already make 150 crores of gross margins. That's something I wanted to highlight. And if you look at the net profit, almost at all-time high. So they don't have much debt, so interest, they don't spend much on interest. It's pretty low. So overall, fantastic growth in terms of sales in the last 3 years, and profits also has fantastic growth. They've gone from almost a loss back in 2018 to almost a profit of 70 crores in 2022. Now that's pretty good, okay, from my opinion. So reserves, they have pretty good reserves. They have around 496 crores of reserves. So in case they want to do some automation, which is also what they spoke about in the presentation and the conference call as well, they are focusing on automation, and they're trying to automate many other things, robotics and whatnot. So that's kind of adding on to the overall efficiencies and increasing the profits overall. So yeah, that's it from from the fundamental perspective. So I know a lot of you might be asking questions. Should we to what level of depth you should look at fundamental analysis. So it's okay to look at the fundamental analysis and understand what the company is doing, whether there is growth, what is driving the growth. For example, in this company, TD Power Systems, the growth is coming purely from the power sector, from railways, from exports. Now across the world there is shortage of power, right? Now because of which you need generators. The companies are investing in metal, steel industries, oil and gas. So all these companies, when they have new plants, they need generators. And this is a small company. They're trying to increase. Even if they grow 20% year on year, that's a pretty decent growth. So that's why I feel that you should look at fundamental analysis and try to club the fundamental view with the technical view, and that's when you get a better picture of why the stock price is moving and what's the potential that the stock price has. Okay, so that's the fundamental perspective. And as usual, I'm going to look at the technicals and see what the stock price is doing currently. We're also going to talk about the targets. The entry price, the targets, and the stop loss. We look at all 3 points, and then we'll see whether you want to invest it now or not. So as always, I go to trading view now and always start with monthly charts. Now if you look at monthly charts, this company has been listed since 2011, and the company has not done much, right? So if you invest in 2011, you'd just be staying in profits right now. Especially in the last few months, you've been finally in profits, right? If you're invested back in 2014, maybe you're still struggling for profits. But what has happened in the stock is, just after the COVID, there was trend line breakout here. In fact, there was a downtrend breakout, and then we had this massive breakout this week in the month of May 2021. Around 170, it's already reached to 400 levels now. And in the last 3 months, if you see, we are seeing some nice demand which came in, and then we had a doji with some really good volumes. And this month, we are finally moving higher, right? So overall, for me, monthly charts look bullish. And I think we're going to take out the levels of 470, and we're going to head towards levels of 500 easily, probably in the next couple of months. And then from there, we have to reassess and see, where the stock is headed to. But overall, for me, the weekly charts also look very fantastic. There has been a consolidation for almost, 1 to 2 months, and that has been a very tight consolidation. The stock also has been doing pretty good. It did not really go down, and the strength has been pretty decent. In spite of the markets falling, the stock has not fallen much, right? Now that shows that there is buying happening in this company on every move down. So you see these wicks, and every time the stock goes down, the stock comes back again. And finally, we had a breakout last week. Now, I did post about TD Power on my Twitter. So if you want to get much faster updates, then do follow me on Twitter. The Twitter handle is in my description. Just go and check in this video description. But what happened in the stock is, we had a nice tight consolidation, here, and then we had a breakout in the last week on the 11th of May. We hit upper circuit almost, and then we kind of went sideways for one day, and then we kind of heading higher again, right? So overall, I think it's the right time to buy the stock now. If we clear the levels of 470, then easily levels of 600 is coming. So I'm looking for any first targets of 600, and then we'll reassess and we can ride the trend, or you book profits there according to how you want. But the targets I'm looking at for initially is 470, 500 levels, and then 600 levels is my next target. But I think once we clear 500 levels, 470 levels, then 600 is definitely coming, especially if the market stabilizes. Now, what should be your entry price? I would enter the stock currently. I'm not sure, because the stock can head higher, come down. We are not sure what will happen to the stock. So in spite of the weak markets, the stock has been just going sideways. So overall, I would even buy the stock currently. I'll keep a stop around 360 levels. So that's 52 point stop. It's around 12%, 10 to 12% stop loss, and I'm looking for targets of 600, right? So 360 is 50 point stop, and I'm looking for targets of 600, which is around 190 points. So that's a pretty 1:3 risk reward, and that's what I'm looking for in this stock. So don't forget, in this weak market, do not allocate more than 5% in a stock, especially if you do not know technical analysis. It's very, very important to protect your money and keep it safe and not lose much money in this market. So I'd probably invest 5% if I'm new to technical analysis, or I'm new to investing. Invest 5%, and then you can add more if you want once the market stabilizes and you see signs of revival. So I'll leave you here. So that's the stock I wanted to cover today, TD Power Systems. Don't forget, if you like this channel, don't forget to like it, like this video and subscribe to the channel. And also don't forget to share this video with your friends. And I'll see you in another video soon. Until then, take care, stay safe, and trade safe. Bye-bye.